If you happen to be like most Americans, the recession in our economy has helped to provide you with a less than perfect credit score. By getting a new credit card account and through responsible use, you can potentially improve your overall credit rating. However, as a result of our economic crisis, new lending legislation, and more stringent approval requirements from credit card issuers, the credit card market for bad credit has changed drastically. There are a number of types of credit cards to rebuild your credit, no matter how bad your credit history may be. There are new federal laws that govern the fees that you can be charged with some credit cards. But as to be expected, lending institutions and their high-priced credit attorneys have already found loopholes and ways around the new federal lending laws. These laws, while good intended, resulted in a much worse market for you to find a credit card for bad credit. These laws have made it more difficult for you to find an institution that will lend to you and lend money to you as an unsecured credit line, which is a much more superior account to be reported to the credit bureaus to help rebuild your credit. An unsecured line of credit is borrowing money or a loan not secured with property or a down payment. Rebuilding credit card options with bad credit. There are four types of credit cards that you may qualify for: unsecured, secured, prepaid debit card, and a catalog credit card. Naturally, these credit cards all provide you with different features, fees, and benefits. Number one, unsecured credit card. This is a traditional credit card. You are given a credit line based on your promise and signature to repay. You'll be charged an APR percentage or interest rate with this type of card, and some fees for individuals with low credit scores due to the increased risk in lending to these folks. These credit card offers are what the new lending laws were targeting. These new laws have eliminated your choices and a chance of a unsecured credit card with bad credit. In other words, there are zero unsecured credit card offers with bad credit. Federal law came in and essentially made it impossible for banks to profit by regulating these fees and interest rates on unsecured credit cards. Prior to government involvement, using an unsecured MasterCard or Visa was one of the most effective ways to build positive information on your credit reports. Of course, only through responsible use of your credit card would it have been positive information. When an unsecured credit card gets reported to the credit bureaus, it is weighted very heavily because this is a credit line that is issued only on your promise to repay. In other words, there is no security for the credit issuer. For example, with a car loan, if you stop making your payments, the bank can always come and repossess the car. However, with a credit card, if you stop making payments, the credit issuer is simply left high and dry. Therefore, the credit bureaus are going to view your behavior on an unsecured credit card as a very good indicator of your creditworthiness. Number two, secured credit cards. It is a good thing that we live in a capitalist economy, and as disliked as attorneys are, they can sometimes serve some good. Many of the prior unsecured credit card issuers have employed high-priced lawyers to find ways around this new credit card legislation. One way around is through a partially secured credit card. The idea is that you must first make a security deposit of about $100, and then you will be issued a major Visa or MasterCard. This security deposit changes this credit card from an unsecured credit card to a partially secured credit card. And that simple technicality, we believe, is what makes this a legal credit card offer. While this is a partially secured credit card, it is essentially the same credit card for people with less than perfect credit prior to the economic recession and new lending legislation. The only differences are that the consumer will now pay more fees and interest rates. In return, you get an account that will not count as much as the account you would have had prior. These partially secured credit cards are just starting to emerge, and we are rather shocked at the specifics of the offer. One popular one requires you to pay a $95 processing fee to open your credit card account. You are also then charged a $75 upfront annual fee. That will be assessed on your first credit card statement, and a monthly servicing fee of $6.25 or an additional $75 annually. You are also required to pay a 36% APR percentage. You'll be issued a major credit card with a credit limit of $300. However, on your first monthly bill, you will only have a fraction of that credit limit available because some of the aforementioned fees will already have been assessed to your credit card account. This credit card will report monthly to all three major credit bureaus. However, we strongly feel the costs associated with this card is absolutely outrageous and way more than is required to build new positive credit on your credit reports. Secured credit cards provide you an account that is fully secured and instead would be a superior choice. The best choice is a fully secured credit card to rebuild credit. This will report your account information monthly to all three credit bureaus. Through responsible use, you could potentially repair your credit history. Secured credit cards will be issued as a major Visa or MasterCard, and instead of partially securing your account, you are fully securing your account by first making an upfront deposit. Your deposit will be FDIC insured and can earn interest. You then will be issued a credit card with a credit limit corresponding or equal to the amount of your deposit. You can usually deposit as little as $300 or as much as $5,000. This deposit is fully refundable, and to fully illustrate this process, let us say that you make a deposit of $1,000. This $1,000 deposit will be held by the bank or credit issuer. It is FDIC insured, it is fully refundable, and it will earn interest just as if the money was in a savings account. In exchange, you'll be issued a major Visa or MasterCard with a credit limit of $1,000. This account and your account information will be reported to all three of the major credit bureaus every month. Instead of paying outrageous interest rates or endless fees, you are only charged a 10% APR and usually about a $50 annual fee. We strongly encourage you to get a fully secured credit card. Number 3, prepaid debit cards. There are two other potential choices, a prepaid debit card or a catalog charge card, also commonly referred to as a shopping or merchandise credit card. We recommend a prepaid credit card because it will not enable you to go in debt. Instead, you can only spend the money you have previously deposited on your prepaid account. Some of these cards will eliminate check cashing fees and the need to purchase money orders. And a few prepaid cards provide you with both free direct deposit and free online bill pay. If a prepaid debit card is an option, we recommend the Account Now Gold Visa card. This prepaid card gives you free direct deposit, free online bill pay, no credit check or check systems check. Number 4, catalog credit cards. The last credit card option is a catalog card, shopping card, or merchandise credit card. These offers are usually a scam. You should never ever consider these credit cards because they are simply a hustle, offering big promises and fulfilling very few. Briefly, these credit cards are marketed as unsecured credit cards, charging little or zero interest rates and may even claim to report to the credit bureaus. The reality is these credit cards are only accepted as payment at one location. This one retail location is also associated or owned by the credit card issuer. It is very similar to a department store credit card in the idea that if you have a Sears charge card, for example, you'll only be able to use that credit card for purchases you make at Sears. Your card will not be accepted at your local grocery store or gas station, and a catalog credit card is not a Visa or MasterCard or even a credit card. There are endless reports of catalog credit card issuers selling very poor quality merchandise to their cardholders for astronomical prices. Further, if you look deep into the fine print on these credit card offers, you'll see that you are automatically signed up for recurring monthly payments that you must opt out of through your own actions. For example, one popular shopping card automatically enrolls you in a $30 a month recurring fee program. So every month you pay $30 for what we believe is simply a newsletter from the credit card issuer. In other words, these credit cards are rip-offs, scams, and just one big con. If they do report to a credit bureau, it is usually only one of the three credit bureaus, and a shopping credit card account will have very little influence on your overall credit score. If you're looking to rebuild and repair your credit history, we encourage you to get a secured credit card to build credit through responsible use. However, you should know up front that if you use this credit card irresponsibly, you can just as quickly build more bad credit. Please take caution and go back to the path of better credit using a credit card to rebuild your credit today. And to get a free credit repair consultation with a professional, call 1-877-925-6475, and to sign up for more free credit repair tips, visit yourbadcreditcard.net. Again, for a free credit repair consultation, call 1-877-925-6475, and to sign up for more free credit repair tips, visit yourbadcreditcard.net.